My cooperative investments beat the Philippine Stock Exchange. I started investing in cooperatives back in 2004 when I extended a 45,000 peso loan to a small workers' cooperative in Cavite. Today, my investment exposure in 14 cooperatives is a little over 150 million pesos. Why invest in cooperatives? The Cooperative Development Authority defines cooperative as an autonomous association of persons who have voluntarily joined together to achieve their social, economic, and cultural needs and aspirations. Cooperative members make equitable contributions to the capital required, patronizing their products and services, and accepting a fair share of risks and benefits of the undertaking in accordance with universally accepted cooperative principles. The primary objective of every cooperative is to help improve the quality of life of its members. Profits are used to provide products and services to clients and are equitably distributed among the members. Your investment in a cooperative contributes to local economic development. Cooperatives prioritize providing products and services to its members who are mostly part of the marginalized sectors such as farmers, fisherfolks, indigents, and micro-enterprises. How can you invest in cooperatives? Most view investing in cooperatives as risky. This is true. According to the CDA, there are only 585 large cooperatives out of the 18,000 operating cooperatives with assets greater than 100 million as of 2018. The remaining 97% are micro, small, and medium cooperatives. Almost a third, or 32% of registered cooperatives, were not able to file financial statements to the CDA. This is a basic compliance requirement and a fundamental source of information to assess a cooperative's performance. Knowing these, I still invest in cooperatives. The key is in choosing the select few that have outstanding performance. The first thing I do is to get to know the cooperative. My financing company conducts due diligence through a thorough organizational appraisal where we assess the management capacity, quality of governance, social impact, and of course, financial performance among others. We apply the same rigor that professional fund managers perform in deciding which stocks, bonds, funds, or other securities to invest in. There is no shortcut. Out of the numerous financial ratios we track, here are three that I focus on: profit margin, asset turnover, and leverage. The profit margin, or net income over sales ratio, is a profitability ratio that measures net income with each peso of sale generated. The higher the net income, the better. Asset turnover, or sales over assets ratio, is an efficiency ratio that shows how assets are used to generate sales. The faster the turnover, the more sales is generated. Leverage, or assets over equity, is an indicator of solvency that shows a company's debt used to finance the business. I prefer cooperatives that have strong capital position or those that have lesser debt exposure. In layman's terms, profit margin is patong, asset turnover is ikot, and leverage is laway. A cooperative must be able to show that it has reasonable profitability, patong, efficient in utilizing its assets translating to more sales, ikot, and have a strong capital position, laway. When these three ratios are simplified, one gets my favorite financial ratio, which is return on equity. Return on equity is net income over equity, which shows how much income is generated for every peso of capital or investment. Return on equity, in layman's terms, is kita. These three ratios, patong, ikot, laway, are quite easy to remember. These provide a quick breakdown when analyzing kita. In my 15 years of experience in investing in cooperatives, my investments earned an internal rate of return of 13.2%, while the PSEI gave an internal rate of return of 9.15%. My co-op investments as of 2019 are almost twice as high compared to the index. The secret is in the growth rates or returns. The huge difference is due to the fact that my co-op investments never gave me negative growth or negative returns. My co-op investments offered regular and consistent returns year after year after year. while that of the PSEI gave several years of negative returns that did not contribute to the growth of my portfolio. In fact, there were 4 years that the PSEI had negative growth in the past 15 years. In 2008, during the global financial crisis, it dipped almost by 50%. That means in that year, I lost half of the value of my investments, and it would take an almost 100% growth to make up for it in the following year. The other years of negative growth happened recently in the past 5 years, 2015, 16, and 2018. There were also 2 years that the stock market ended flat, last year and in 2013. Contrast this with the regular and consistent growth of my co-op investments and you will know why this accelerated faster. The graph shows a smooth, consistent, and predictable upward pattern for the co-op investments while the stock market was full of ups and downs like a roller coaster. I consistently gained positive returns each year in my co-op investments. The PSEI, on the other hand, fluctuated, meaning there were periods of ups and downs. The down periods set me back, which translated to paper losses. What are the advantages of investing in strong cooperatives? In investing, cash is king. I received actual cash dividends and interest payments from my various investment placements in cooperatives. I used the power of compounding interest. I took advantage of the cash flows from the profits actually received to be added to my original investment. Financially sound cooperatives give consistent, regular, and generous dividend payouts. This is why I have limited exposure in the Philippine stock market. I could hardly find a listed company, even blue chips, that provide consistent, regular, and generous dividend payouts. But always invest with utmost caution. Like any other investment, there are risks involved when investing in cooperatives. So it is necessary to be critical when choosing cooperatives you wish to become a member of. Always look for their co-op peso score. My secret is to only invest in co-ops that have a score of 85 or higher out of a possible score of 100. Invest wisely. This is Sir Vince in Vegan Ilocos Sur saying, you can learn to be rich.